and welcome to Sinomania for the week of January 26, 2007. Bubble trouble in China. Chinese stock markets continue to reach record highs. Is it irrational exuberance, Shanghai style? More IPOs, 2 on NASDAQ and more for Singapore. And a look at China's currency with money everywhere, what to expect this year with renminbi. Stock market capitalization in China has surpassed $1 trillion for the first time, with Shanghai up 130%. Both Shanghai and Shenzhen exchanges closed with record highs on Monday, up nearly 4% overall on strong buys in retail and transportation sectors. Overall, market turnover is 5 times recent levels. This spectacular performance has brought the bears out, with strong warnings not to mess with the Chinese honeypot. Among those warning investors to stay away from China this year are Citigroup, Hong Kong Shanghai Bank Corporation, based in London, UPS Warburg, and, of course, Dr. Doom himself, the world's best-known contrarian, Mark Faber. From his lofty office in Chiang Mai, Mark Faber predicts a severe correction this year in Asian markets generally, and China in particular. His words get attention, as Faber famously predicted the '87 Wall Street crash and the '97 Asian currency crisis, among other accolades, but he got his SARS call wrong. And according to one analysis, Faber has been right about 54% of the time. We here at Sinomania are shamelessly optimistic, but that doesn't mean we don't see some risks ahead. Price to earnings ratios are getting high with many Chinese stocks. The average PE for Shanghai and Shenzhen is 38 now versus 16 in the much larger and more mature Hong Kong market. 2 sectors look risky. Major financials are trading at PE ratios in the 40s, and the real estate sector is selling at ratios over 50 times earnings. But corporate profits were up 25% last year, and that trend continues. Deutsche Bank's China market call is a rational bubble, and other analysts see no crash ahead this year, but significant slowing. And remember, the slow but steady appreciation of the Yuan, China's currency, increases the value of Chinese assets. 3 IPOs to talk about this week. First, in petrochemicals, Sunvic Chemical Holdings Limited will offer a quarter of its enlarged share capital on the Singapore exchange. Sunvic, out of Wuxi, makes petrochemical products for industrial and consumer uses. Singapore is an increasingly popular listing spot for Chinese companies. Next up, biotechnology firm 3S Bio Inc. of Shenyang has applied with the U.S. Securities and Exchange for a listing on NASDAQ under symbol SSRX. 3S Bio plans IPO of $100 million, offering over 7 million ADR shares, each representing 7 ordinary shares in the $12 to $14 price range. Lastly, internet advertising company Alias Ad Network of Shanghai plans a $100 million IPO on NASDAQ as early as March. The company has at least half the internet ad market in China, and it is denying rumors of a takeover by Focus Media Holding, one of China's biggest media firms. Money everywhere. Already this year, the yuan, China's unit of money, has appreciated 0.5%. That makes the yuan more expensive than the Hong Kong dollar. This is certainly not enough to fend off critics in Congress like Chuck Schumer or Lindsey Graham, who still threaten tariffs on Chinese imports and a return to 1930s style protectionism, but it does show that China's money markets are changing. Liquidity is everywhere in China now. Foreign exchange reserves now exceed $1 trillion. Stock markets are capitalized at $1 trillion, with Hong Kong stocks nearly twice that amount, and there is an estimated $2 trillion in cash and household savings among Chinese. One important area to pay attention to is how China invests its huge foreign exchange reserves. Right now, China is the second largest holder of U.S. Treasuries, America's debt after Japan. But the Chinese have indicated they are looking to change how they invest their money. China's holdings impact the U.S. economy. This is another reason why Congress must tread very carefully. For now, Treasury Secretary Paulson and the Bush administration are being cautious. After 2008, all bets are off.